Hey guys, welcome back on the channel. So I've been yield farming for the past couple months on PancakeSwap pools, high cake incentives. If you're new to the channel, I have a full-on playlist showing you my results on a weekly basis. Started with $250, right now it's at around 400. I had some cake that I was farming on the side and then I redeposit into some of these pools. There are pools who are doing really well. Among them is actually, let me share that with you. So look at these three pools. Cards is doing extremely well. This protocol has been just outperforming a lot of things on the Solana ecosystem. At the very least, you can see that everything is mostly red for the past 24 hours. Minus 3, 5, sometimes 10% drop in value. But the only thing which is up substantially, it's Cloud. But aside from it, the big gainers are Cards and Pump. Cards is doing even better than Pump.fun. Although this is a very recent token, it's not nearly as established as Pump, even when it comes to liquidity, to the community engagement, etc. But it's still a very interesting token with interesting fundamentals that link to real world assets, and it's something unique right now on chain. And I had been eyeing this for the past week or so. You can see this had a massive appreciation, over 1,000%. This is just insane. And then I thought about waiting it for to dip in order to buy. I missed this one. It set then a new all-time high. Then I missed this one once again. It tested at this all-time high once again. When it went down, I entered at around this price range here. So in here, I got in, I then set up the ranges that you can see here with the blue lines. Originally my lower range was below, actually it was at around 18 cents per token, and then as the price kept going up in this last rally, I kept readjusting, and this was my last range. Now it's out of range, and it's something that I don't like about PancakeSwap is that when the pool is very hot, it's very used, I get some errors when trying to deploy the liquidity. So I removed the liquidity to try to readjust the range with a newer upside range, but I couldn't, so I had to choose another pool because optimally I wanted to still have exposure to this, which has a ton of volume. Overnight, this one generated me over 10% yield. And this is the type of days where you can really make it while being a yield farmer. So these three pools are yielding really good results right now. The one with the lowest APR, which is still a substantial APR over 500%, is Fartcoin. This has a ton of liquidity. So let me go back here to the Solana LPs. These are the trending tokens sorted by liquidity. So if you're looking for potential good opportunities, look for these ones. And for example, the Trump token, it's the most liquid asset from the ones trending on Solana, and it dipped 4%. It can be a potential good opportunity. Fartcoin, the same, dropped 3%. SPX, Dogwif, G2 as well has been dropping a little bit. I'm also yield farming on this pool as I showed you. So potentially these ones which dipped for the past 24 hours are going to have a, let me call it, safer entry, because it's unlikely that they will just keep on crashing and bleeding versus one of these which is up. At some point this green will turn to red, right? So this is a good way that you can filter out reliable tokens to apply this sort of high risk strategy, because we are applying tight ranges, right? But potentially what I will be doing for the next month is try to just grow this position. I started with $250. Right now everything is at around 400. I'm trying to work this up to $1,000. And in the meanwhile, with all the yield that I'm getting from these pools, I will have to not only compound into it, but also open up blue chip pools. That's the ultimate goal. Have a steady portfolio of blue chip pools with wider ranges that are designed for very much passive management from my end. But if you like to look at charts and manage liquidity all day long, if you have enough capital, you can make a living out of this actually. Personally, I prefer to have wider ranges with blue chip pools, compound the yield, take profit. Depending on the price, I compound or take profits, and that's just how I manage things. I have a full-on playlist, weekly updates on how I grew these positions over time using PancakeSwap's farms. Right now the cake incentives are not as high as before. You can see I have over $5 in pending yield. Half of it, a little under half, is cake. In the beginning, if you go and check my first videos, 95% at the very least of the yield would be cake. So although cake is toning down in incentives, it's still quite important in order for us to fight impermanent loss. Because whenever we just close a position and open a new one with a lower price, so for example, if let me go back here on the X screener, you see most of these are on the red, right? If they go out of range and you still want to be in range and close your position, open a new one because they are being highly profitable in the shape of fees, you will lock in some impermanent loss depending how much the price has dropped. Then you can use cake when you open a new position to top up the pool. In my experience so far, even when I do that, I don't really use all the cake that I yielded. It has not been necessary because the incentives are that good so far, at least. And even if I show you here with Jito, the cake right now is triple digits. At some points it was over 1000% cake incentives in this pool, but the trade fees are still very good. So it's still worth it overall. And something that you will see if you decide to test this for yourself. So for example, let me show you here this smaller position. If I drop, let's say $50 more and double this, I will notice my APR going slightly down. Both the trade fees and the cake APR, it will slightly decrease. I'm not sure why that happens. I think it's just the algorithm working things to keep things even, you know. And from it, what I get is that PancakeSwap wants not us to have the liquidity specifically deployed on one pool, but it will pay you better yields if you have your liquidity deployed across different pools, which is good as a way to spread out risk, but it's also more intensive in your end because it's much different to have one pool or a couple pools that you need to manage. If you watch my other videos, most of the times I have two pools, sometimes 3, 4, yeah, but most of the times it's two pools that I have because I don't want to spend a lot of time managing the pools, right? And if you keep spreading your capital through multiple pools, the more pools there are, the more time it will demand from your side in order to manage it. Sometimes one pool goes out of range, not a big deal. But if two pools go out of range, you probably want to double check it and see, okay, where am I at? Should I readjust ranges or should I just wait it out? Sometimes even when it goes out of range on the upside, if you wait it out, the market will cool down. For example, here with cards, I'm pretty sure that at some point the market will cool down. This is a very recent chart, so I don't have a lot of data to take information from, but this was a very sudden pump. It started yesterday. Potentially there will be a correction. That's what I'm trying to say here. So if you want to find these pools, you go on the X screener, you sort things out by liquidity, you see the most liquid assets, and then you go and try to find them on PancakeSwap. Sometimes there will be highly incentivized farms, for example SPX. I'm not sure if it's still incentivized. It still is. As you can see, a couple weeks ago it was having higher incentives, but it's still being heavily incentivized, especially Solana paired with SPX. If we go with Dog with Hat, it also has some incentives, as you can see. Although the same thing applies, a couple of weeks ago I know the incentives were higher. I was actually farming some of these pools myself. So this is how I try to find the best farms right now. I look for liquidity because I don't want recent meme coins. This is actually my short list, my watch list, right? But if I go here on Solana, again, trending assets, let's see, sorted by liquidity, we have Pump, Fartcoin, cards. So Troll is on PumpSwap, not on PancakeSwap, so it's a different DEX. But this can show you how liquid are some of these trending assets, and the more liquid they are, the better. But the end game, of course, is having all of the yield that my positions are earning to be then used to build a blue chip assets pool, like for example WBTC with Sol. Let's see there. Let's go and try to see what kind of pools we have here. So yeah, this one has been highly incentivized for a while. BTC and ETH as well on Solana. So these are triple digits pools. If you go to deposit into them, you'll only get these triple digits with narrow ranges. But the whole goal of my positions is yielding into these pools with wider ranges and have a constant deposit every single day, like let's say $20, $50 every single day deposited into these pools, and those will then be generating yield for the years to come. So essentially this is a way where you can multiply your portfolio in a relatively short amount of time, in a couple of months, not by hunting a next meme or trading, but a more passive way that crypto offers, which is yield farming. And if you want to know more about this, you can reach out to me on Telegram. I'll get back to you. My Telegram handle is down under in the description. My channel is still fairly small. If you get to ask me some questions, I probably will have the time to get back to you. I can help you with questions for free, no worries. But if you want one-on-one coaching, go under in any of my videos in the description. You will find this link. 20% off on your first month with my link. This is for the Underdog investors group. Not only you will be able to have access to a ton of free resources, but if you pay for the monthly subscription, this is a coupon that gives you 20% off because you're following my link. But they even have one-on-one coaching that's called the Fast Track program, I believe. And you can just book a session with some of their teachers, one-on-one live streaming. They'll just guide you by the hand in order to show you all the potential of yield farming, providing liquidity, or some other DeFi opportunities that you can earn passive income on. I'm not saying this because I'm affiliated with them. You can go and check their own YouTube channel. They provide very valuable content. And that's for the people who have the money and want to speed up their learning curve. I would highly recommend you to join the Underdog investor group. Although if you are comfortable enough already with crypto, with DeFi, there's a ton of free content out there that can help you have these type of results, if not better, okay? Although this is very high risk, I would highly advise you to go with blue chip pools, wide ranges. That would be a more solid option in my opinion, okay guys? So that being said, if you have any questions, let me know in the comments. Hope you took value from the video, guys. If you're new to the channel and you enjoy this type of content, like and subscribe for more. Thank you for watching. I'm going to wrap this one up. Take care, keep exploring crypto. I'll see you on the next one.